Is the current state of the economy a boom or simply hanging in by a thread? This is the question posed by economist Rosenberg, who paints a less than rosy picture of what's to come. Rosenberg perceives the US economy as hanging in rather than booming. He suggests that broad sectors of the economy are stagnating or even contracting. He anticipates a recession, viewing it as merely delayed due to factors such as fiscal stimulus and consumer spending patterns. As for the global economy, Rosenberg describes it as muddling through at best, with notable weaknesses in Europe, China, and other regions. Rosenberg casts a skeptical eye on the recent blowout jobs report, citing issues with seasonal adjustments and response rates. He urges a focus on aggregate hours worked, which were negative, indicating that the labor market may not be as robust as headline numbers suggest. Rosenberg alerts us to the fact that consumer spending has been propped up by decreasing savings rates and increased borrowing. He warns that such a trajectory is unsustainable and could lead to a significant consumer recession when the tide turns. Rosenberg views the stock market as overvalued and cautions of the risks of a potential bear market. He highlights that household balance sheets are heavily concentrated in equities, comprising 70% of financial assets, which could lead to significant economic impacts if the market takes a downturn. Rosenberg advises diversification, particularly for older investors who may be overexposed to equities. He expresses a preference for long-term bonds, precious metals, and certain stock sectors like utilities and aerospace, defense. He also favors some international markets such as Hong Kong, the UK, Canada, and emerging Asia over US equities. Rosenberg expects the Fed to continue cutting rates, with his highest conviction trade being lower interest rates. He views the recent backup in bond yields as a good re-entry point for long-term bonds. Rosenberg expresses concerns about both major US presidential candidates' economic plans and hopes for gridlock in government to prevent potentially damaging policies. In summary, Rosenberg offers a cautious outlook, warning of potential economic challenges ahead despite current market optimism. He advises investors to brace themselves for potential downturns by ensuring proper diversification and having anchors and ballast in their portfolios to mitigate risks.